put you on the map. This is Ron Costa broadcasting live from the Mappable USA studios in Las Vegas, Nevada. And folks, if you're listening to this podcast, you know we are big on data. We are big on crowdfunding. We are big on Reg A, the whole gamut of stuff. So we're going to get into that a little bit more today. And in order to do that, we're going to introduce Vicki Hutchmala from the World Token Market. Vicki, how's it going?
Doing great, Ron. Another fabulous day in Vegas. What can I say? Although, now that it's going down in the 60s, we're getting cold. 60s is cold here in Vegas, but the sun is still shining. And we have a really exciting podcast today, so let's get started.
Yeah, absolutely. Like I said at the start, it's all about data right now. You have to be able to quantify things. And let's introduce our guest today. Folks, we've got Sydney Armani from FinTech World. Sydney, how are you doing?
Hi, Ron. Hi, Vicki. Good to be with you guys.
Our pleasure,
Absolutely.
Sydney.
Thanks for being on again as a repeat guest on the show. The last time you were on, like I told you before offline, man, that show did bonkers. It was great. And everybody really enjoyed what you brought to the table last time. So we're looking forward to today's show as well. And secondly, let's introduce Woodie Neiss. Woodie is from Crowdfund Capital Advisors. Woodie, how's it going over there today?
It is amazing. It is great to be with you guys. Hello from Denver, Colorado, where we're used to 30-degree weather.
30-degree weather over there. Yeah, that's sunbathing weather over there in Colorado, right? Man, that's cold, man. I'm telling you, it's crazy. But so listen, let's get into this a little bit now. Sydney, why don't you really quickly just give our audience a background on what you were doing and a little bit about FinTech World before we get started?
Well, good. Well, thanks very much. Well, first of all, hello, Woodie, and good to be with you. And it's very honor. I know Woodie since 2012, but we're very honored, and I'm glad you guys put this show together, having Woodie Neiss and actually our friend, their friends, close friends, they call him Woodie. It's short with Woodie Neiss. And if you want to know about crowdfunding and how it started, what's part of the Jobs Act, and all those titles, and especially Title III of the Job Act, crowdfunding regulation, CF. If you want to know who the godfather is, that's Woodie Neiss. That's who started actually, put the legislation, put it in the Congress, working in the both sides. So I'm very honored to have today, and actually talking to Woodie and want to know about the crowdfunding, how it evolved, what's going to be forward. There's a lot of great development happening right now in the crowdfunding on Reg.CF. And, we're going to talk to Woodie today, know more about it. So this is going to be great. And I'm going to be all listening, like every of your listeners.
That's great. And Woodie, how about yourself? How about a little bit of a background on you and maybe a little bit about what you're doing at Crowdfund Capital Advisors?
Sure thing. Sydney, that was very generous of you. I'm flattered, and I think you've gone above and beyond. I would not take full credit for this. I am an entrepreneur. I had started a company by the name of Flavor RX and had raised millions of dollars of that business prior to selling it. We flavored medicines for children so they're more compliant. And when I was raising money, I kept on saying to our lawyers, why don't I just raise money from all these mothers that are converts and have gotten the kids to take medicine? And at the time they said, well, you can't because maybe they're retail investors, they're not accredited, they don't know about the risks involved. So I gave up on that idea, but I always thought it was silly that we couldn't raise money from those people that were closest to us, be it family, friends, or customers, and you could in a very limited way. So it was with that and the collapse of the markets, back in 2008, 9, and 10, that we sort of came up with this idea that we really should update these 80-year-old security laws. And that's what brought us to Washington with an 8-point framework. We showed up there. We walked the halls of Congress. It didn't matter what side people were sitting on. We went to talk about jobs. People listened. It was amazing how much and how rapidly Washington picked up on it. And I think a lot of it had to do with the fact that we were entrepreneurs that showed up there and we were not lobbyists. We were telling them how it is literally on Main Street, and they got it. The White House got it. Members of Congress got it, and it was great to be at the White House as they signed it into law. We knew at that time that this industry was going to be something that would be covered by the major financial news networks, any of them in particular. And so at that time, we came up with the idea of creating a database that would collect information on companies that are raising money online on these online investment platforms. And so we built that database. When the industry went live, we kicked the database off and we started collecting, aggregating, normalizing, and analyzing that data. Really for the SEC and Congress, we did annual and quarterly reports. And that's really blossomed and grown, and the data set has grown so much that we got the interest of Bloomberg about a year ago. I went through a very lengthy diligence process with them where they had to diligence us, the company, the data sets, the data dictionary. I mean, just, the platforms itself. We had to come up with the onboarding process for how do we get these online investment platforms that are registered with FINRA. So you would think it would be super easy, but to get their data be in compliance with standards that are acceptable for an institution like Bloomberg. And so that data feed went live over the summer, and we're excited for, what it's going to tell those type of viewers that look at Bloomberg for, true, accurate reporting of what's happening in different sectors of the marketplace. And I think, with the changes that have come down from the SEC that will be implemented in February, I think we're at a massive tipping point for the industry. I like to say that next year will be the year of the crowd, because while us in the industry know what's happening, I think next year the rest of the world and the rest of the United States that might not have heard of this will definitely understand what's happening. So I think we have a lot to talk about. There's a lot of data to talk about. It's great to be here with you guys, and thanks for having me on.
Well, let's start off, and let me ask you this question. The SEC came out with new rules in November. What do you think the impact will be on crowdfunding in light of those new rules regarding raising the raise to $5 million and also on finder's fees and commissions? Is that going to make a huge difference in how more people get involved in it, or just on the whole industry as a whole?
I think the first part will have the fundamental shift. So the cap on the amount that issuers could raise in a 12-month period before this goes into effect was $1 million. So when you look at the spectrum of companies out there and the amount of capital that they need, companies that need less than $1 million are a very specific niche type of company in the marketplace. If you're more of a mid-size or a hyper-growth type of company, you're going to need in excess of $1 million. The change to $5 million really now increases the amount so much that any startup, small business, or medium-sized business can do a significant Series A type of round. So we are now, when we came up with this idea, it was sort of to bridge the gap between personal finances and what you could get from angel investors. Now what we've done is we really created an on-ramp that will allow more mainstream type businesses to come in and raise money. So we've had about 3,500, a little less than, offerings to date. It's been a slow and gradual increase. A lot of the calls that we've gotten in the past have been from companies that wanted to raise over $1 million. I think we're going to see a fundamental shift whereby, I wouldn't be surprised if the data set doubles in just the next 12 months alone from the interest that we're going to have. The finder's fee, it all depends because, that type of thing, it's very structured within the confines of Reg.CF as to what the platforms can make as a commission. It has to be disclosed. I don't think the finders, the principle of crowdfunding is really that you're raising money from people that and if you look at the data and all the data that we've analyzed, 80% of the money comes from a founder, an entrepreneur, a small business's first or second degree network. So it's their customers, their friends and family, period. So these finder fees work really well when you've got businesses that don't have a network. I think that'll work well for different types of offerings that are not necessarily the Reg.CF offerings, because I believe that the Reg.CF offerings or the Reg A offerings are really going to be these businesses that are saying, I am going to turn my customers into investors, make them investimers, and make them have a stake in the business and use them for marketing power and sales agents for us. And so it's going to be, you're not hiring a finder to go out and find capital for you. You're turning your customers into this, evangelical base that's going to be a marketing engine for the business. And I think that's going to be the fundamental shift that we see with these businesses.
Yeah, Vicky, we know for our audience, and Ron, for your audience that, not familiar with the crowdfunding, the word crowdfunding, we have a couple of the crowdfunding as, we have a charity crowdfunding, and we have, a donation crowdfunding, and we are talking about regulation crowdfunding, which is, has to do with your compliance, so, donation is when you donate somewhere, it's really of a crowdfunding, and crowdfunding is nothing new, and I always say that, the church and synagogue and mosque, they find it well before us. When you go to church in the end of the sermons, they pass the plate. It's crowdfunding. So, but and
you're
the
so
government,
right, Sydney. You're so right.
Well, they figured it out thousands of years ago. So, and basically, what we're talking about right now with Woodie and about the regulation crowdfunding, about financing, their compliance. These companies, they have to have some sort of kind of, checks and balances before they can enter to some of these platforms. And Woodie can tell you about this platform that they have to be authorized by SEC. Would you, if you don't mind, can you tell us about how some of these platforms that they're regulated crowdfunding, what is their role is? How do they operate?
Sure. And that's a really good question. And Sydney brought up a very, very important point. This is a very different flavor of crowdfunding from the GoFundMe, from the Kiva, from the Kickstarter and the Indiegogo. There's no promise of a financial return in that type of crowdfunding. In the crowdfunding we're talking about, companies are issuing debt or equity type of security instruments to investors, and those investors are expecting a return. Whenever you sell a security, you have to provide disclosures, because this is a regulated industry now, so that investors can review them, not that they're necessarily going to, but that they have all the disclosures that they need to make an informed decision. So when you want to raise money online through regulation crowdfunding, you have to go to platforms, these online investment platforms that are licensed by the SEC and overseen by FINRA. And so it's a very different experience. You go onto these platforms, you create an account, you have to let them know how much money or net worth you have because that limits how much you can invest into one of these offerings. And then you can, browse the different offerings themselves. You're probably just going to go to one where someone said to you, hey, I've got this business idea, me, help fund me. And you can read about the company. You can see a campaign video about it, read the disclosures, learn about the valuation, the type of industry that they're in, and you can make an informed decision. What's interesting about this is people are investing, but they're not investing all of their net worth. They're investing on average a little less than $1,000. So for a lot of retail Americans, that's a big size check. And they're putting it into a business and an entrepreneur that they believe in, but it doesn't represent all of their savings. And that's the important thing about this too, is as with anything, you need to diversify. You need to make sure that your investments are spread out. So if any one particular one falls or fails, you don't lose everything. So the principles apply here, and it seems that the crowd is logical, and they've been following that wisdom as well.
Yeah. You brought a good point, Woodie, and that was intended to be, community crowdfunding. And basically, right now with the COVID and all these distressed businesses are going into your community, and that could be a tremendous help. That you see that there is a restaurant in your area that is already making it. They need some more money basically in the future to kind of have an investment on those, or any kind of a business around your neighborhood, your community. You can basically invest on them because that was really your initial, everything was initiated about, to help the community best. invest what you know, what you are around it, and what you guys been doing right now with this community is that instead of going to those difficult time, and perhaps get some money from the government, from local bank, but SBA, that's start from the community, start from the people also neighborhood. But I thought you can elaborate on that, and also you're working in some sort of kind of a platform in a way that they can get some money to match the government match that. How did that come up a lot? Is it going forward with that so they can raise some money, and also local government or federal government will match that money basically? Will it be an SBA or some other one? Could you tell us where are we at with that?
Sure. When we hit the last financial crisis, of course, the idea was, listen, if we can't get money through the traditional means, why not let our customers and friends come in and fund it? Now we're faced with another crisis at our hands. Small businesses and restaurants are going under left and right, and we're left trying to figure out what we can do to help these businesses. How can we maintain a sense of normalcy in our communities if all these local small businesses go under? So we saw how well this is working. We saw how regulation crowdfunding engages local community investors in these local businesses and helps drive revenue to them. And by the way, another great data point is companies that have raised money online between the year that they raised the money from the crowd, the following year, have seen on average a 23% increase in revenues. So wow. We know that engaging the crowd that way works incredibly well. And so we came up with, again, another framework. We decided let's go back to our friends in Washington and talk to them. And we said, you guys, the stimulus programs that you came up with, the PPP, the EIDL, the Main Street Lending Facility, have for one reason or another been colossal failures. They just haven't delivered what we needed to deliver at a micro level on Main Street USA. And the data through those programs just tells you how bad it was. I mean, the government last spring carved out $600 billion for these programs. The Fed has been issuing reports on the status of those programs every month since. The last report that came out in November showed what we've been seeing the entire time. They got $600 billion in. As of November, they had deployed only $4 billion. So there was $596 billion that was meant for Main Street USA, these small businesses that are going under. Back in the spring, it was carved out for them, has not gotten to them. And so we said to them, hey, listen, understood that you've got challenges in these other programs, but we literally have a turnkey solution that can allow you to follow the crowd so you're not picking winners. Let the community businesses go to the crowd and say, listen, if you want to see us succeed, if you want to see us survive, why don't you help fund our survival to bridge the gap again so that we can get through this pandemic and resume normal operations. And the great thing about small businesses is they don't need millions of dollars. They need hundreds of thousands of dollars. So we were saying, if the average PPP loan is like $100,000, and a small business says, listen, I need to raise, let's say, $200,000, they can raise $100,000 from the crowd. And if they hit that funding target, then they can go to this fund that we're talking about, which is what we've labeled the Main Street Recovery Co-Investment Fund. And the portals would be registered with the fund, so the fund would know which online investment platforms are registered to partake. The portals would let the fund know that a company had hit its funding target. We'd probably do a little diligence to make sure that, everything's checked off there. And then the government would allocate, matching dollar for dollar up to, like what we're suggesting is $250,000 per business to these small businesses. So what you've done is you've engaged local community. Now these stakeholders are definitely going to be marketing this business to everyone that they know because they don't want to see you go under. Plus they want the normalcy of having that business in the community. We've coupled it with a dollar for dollar matching from the government. So the government is now totally out of the game of looking at loan applications, they don't want to play this game of how do I come up with a credit score to figure out whether or not these loan applications are good. That whole thing's out the window because no banks are lending right now because they're looking at all businesses through the lens of this COVID. Right. So they're assuming everyone's going to go out. So it's a self-fulfilling prophecy that way. And what we said is if the government does the matching, we get the capital that they want to get to these local communities at the most grassroots level, and it will have the biggest impact. And so we've been pushing for the government to carve out $20 billion and create this Main Street co-investment lending facility. And, you know, Washington is not passed, and so we've had a lot of talks. You know, I would encourage all of your listeners to pick up the phone and call your constituents in Washington and D.C. and say, you know, it seems like you've forgotten about us, but we're here. We're suffering. We're not Wall Street. This is not the same experience that they've been having, and we need you to do something. And this Main Street Recovery Co-Investment Fund can actually work incredibly fast. Immediately within 90 days, we believe we can fund over 80,000 businesses all across the United States.
Well, what is the holdup with that? Since the CARES Act created a lot of money, PPE money for small business specifically, why is it being held up, and why hasn't it all been distributed? Because there's only a very tiny amount that's actually been distributed, and many of that was large loans.
That is correct. The problem is initially the loan size had to be $1 million, and now that's down to $100,000, but the loans have to go through banks. And the banks have their underwriting criteria for loans that has not changed despite the pandemic coming. So their underwriting criteria is we only underwrite loans for which we think the business will maintain a viable status. Well, what business is going to maintain a viable status if they don't have customers coming in and cash flow to help support their business? And if the government's coming up with restrictions, which we need to because we have to get through this pandemic, we have to look at how do we fund these businesses differently. The banks haven't done that. They haven't underwritten any loans because of that, and the money has sat with the Fed. And the Fed, we've had conversations with them. They're like, our hands are tied. We've got, restrictions on how the capital can be used. And I point out to them, well, Section 13.3 of your own rules literally stipulates in emergency situations you have the ability to craft, new policy and stuff such that it can help our local businesses and local economies. I think this is the crisis where you need to put into effect that section of your own clause, but it's, these are bureaucratic institutions and they just don't, innovate and move as fast as we would like them to.
But if the money is backed by the government, why do the banks need to use their standard criteria if the loans are guaranteed by the government? They have they have nothing to lose.
Yeah,
it doesn't make any sense to me.
Right, and I agree with you. You would think that where you've got these guarantees, where you've got the government essentially giving free money in certain situations, there would be no pushback. But the banks, I think the banks feel like they were burnt in the last economic crisis. And so now they're like, well, these are the rules, and we just follow the rules the way they are, and it's black and white, and we see no gray.
Yeah. It's a sad thing when people are stuck in the past.
Yeah. Right.
Well, that's banking. That's what we have these platforms, basically, Reg.CF, because they're all entrepreneurs themselves. Now, Ron, do you have any question? I mean, you're very quiet.
Yeah, so. I do. I'm kind of taking all this information in, and what are your company in general compiles data from all these different Reg A's and Reg.CFs. Is that right? That's basically what you guys are doing? That is correct, yes. So, like, I know if you go to the SEC website, you can do a list and find out who's actually registered for a Reg A. You can pull up an A1. Your company basically takes that data and just accumulates it with a bunch of other stuff, puts it on steroids, and syndicates it out to a bunch of different sources, like you said, Bloomberg, et cetera, right?
Yes. So we collect about 125 data points on every single offering. Yeah. Form C that's filed with the SEC is only a fraction of that. We go to the platforms and we pull in information about the company itself, the campaign summary. We have pull in information on the industry. Evaluation is definitely not anything that's disclosed in any documents to the SEC. So we have to go through disclosure documents and find that, or the terms of whatever security it is. And so that's what makes our data set really valuable. Is it's like Crunchbase for startups and small businesses. Crunchbase is your hyper-growth Silicon Valley type of companies. But this data set represents Main Street, USA, and all of these smaller enterprises that are raising capital online. And so we can learn a lot about, restaurants that are raising money online, or, yoga studios that are raising money online in a very different way, but a very rich data set nonetheless that can tell us where capital is going, where investors have investor sentiment about putting capital. Yeah, it's all there.
It's really strong information. I'm curious though, how do you determine data from companies that are raising money that are not on portals, that are doing it like on a private label basis on their website, or they have an investor relations section on their site? A lot of people are doing that. How do you track that data?
That's a really good point. We don't. Because of our onboarding process that we have to get the data through to Bloomberg, we only work with platforms that are registered with the SEC and overseen by FINRA. So if it's a one-off broker-dealer that's doing a deal, it's not part of our data set. So the numbers are actually bigger than what you see. But the reality is most people are using these online investment platforms to raise money. And so we're able to capture the majority, what we believe is the majority of the data set out there that exists.
Right. Well, either way, these have to be approved by the SEC, right? Even if you're doing it on a private label basis, right?
Yeah, I mean, you file. It's not that you're approved by the SEC. It's you're filing a notice with the SEC that you're raising money, and so the SEC doesn't literally look at that document and be like, you know what, I'm not going to approve this one. Everyone gets to file a notice saying that I'm raising money, and that way the SEC knows who these businesses are and the people behind it that are raising the capital.
Right. Do you provide your data source via an API to some of these guys like Bloomberg?
Yes, exactly. So right now we have what's known as a cron job, really, and it spits out a file that's updated every day that goes to Bloomberg Terminal. So if there's a Bloomberg Terminal subscriber, for the most part, they get live feed of what's happening, and it helps them create indices about what's happening in this marketplace. Because the data set has got more companies in it than the New York Stock Exchange now, if you're trying to do some, macro level analysis and compare what's happening in the United States, you now can capture, Wall Street and Main Street in one data set. And we have some data scientists that we work with who were surprised that they were able to reduce their errors by 40% when they included our our data set in their sort of bands of analysis. There's the more everything today, by the way, I'm not speaking to the choir here, is driven by algorithms. It's driven by AI. Yeah. So it's not like people are sitting there necessarily looking at the data. It's these hedge funds, these asset managers, these economists are pulling in this data and feeding it into algorithms that they've already created to understand what is happening in the United States, what the trends are. With our data set, because we have natural language processing capabilities in it, you can actually search for keywords like COVID. And then you could see, which businesses have been impacted by COVID, how they've raised money and how it's benefited them. I think one of the things we haven't talked about is the fact that this whole type of fundraising is a jobs engine. There's almost 12,000 direct jobs that have been supported by this. But if you look at what Paycheck says, which is for every, one hard employee that you have, you support 7 indirect employees by, support staff in the community, suppliers in the community, your AC repair person. So you're talking about, 150,000, plus type of jobs all across the United States that this is helping to support. I think that's lost a lot of times when people are just talking about money, money, money. We're actually talking about companies, livelihoods, people's ability to pay for groceries, rent, and mortgages.
Sure.
Yeah, it's what I always say. People need to look at everything that they're doing in a 360-degree position, because unless you do that, you can't see all of the ancillary points that are happening with every decision that you make and how exponential what you do has on the whole community. It's not just, the banks don't want to issue the funds because it's not part of their criteria, but the funds the banks are forgetting all of the people that are impacted by that single decision that could make the world better if they weren't so tunnel visioned.
Yeah.
I think that was a long way of saying the banks are not quite up to snuff.
Well, the banks are banks, always going to be banks. But what I want to tell you, this is a very great, if I look at it as entrepreneurship, this is a great way to get to the market, and also for investors and bigger investors. You can see these platforms to be a market validation. A lot of good things, a lot of good companies, from beer companies, and that you guys know about, and also from, like Peloton was before they went to the, public right now, as everybody use Peloton, they were in one of those crowdfunding sites. So you can see it as an entrepreneur out there, instead of going to the bank or going to the VC or getting some angel investors, they, put their products out there and have the crowd to make a decision on that. So it's been very helpful for that, basically. For somebody has an idea, somebody has,
Yeah, I think you hit on a really good point. If you look at the data right now, there's been almost 750,000 Main Street retail investors that backed 3,500 offerings, okay? Just stop and let's consider that we have, we're approaching 1 million average Americans that are saying, yes, I believe in my local business and I'm willing to put some money into it. I mean, that shouldn't be lost either, that, people speak with their dollars, but those dollars speak to follow-on investors, because they're going to be like, wow, there's, 250 people interested in this business. Maybe I, as a VC or, private equity, need to be paying attention. And that's where we're going with this. They are going to be following the crowd because, hey, if you've ever been a small business and you've gone out to raise money, what's the first thing that they ask you? Do you have a customer? Okay? Yeah. So this doesn't just say I have a customer. This says, you know what, I have a customer, and that customer invested in me. I mean, boy, it doesn't get any better than, a customer bought my product, yay, but a customer believes in me so much that they invested in my business. That's where we're heading.
Yeah, and not just investing in the business. These people aren't just getting a T-shirt in response. So they're getting equity, and that's really even better. That's just a great way. It's not like a Kickstarter. So as we talked about at the start of the show, this is equity crowdfunding. It's a whole different story. It's like you said earlier, the data is showing some good movement on this for sure. Woody, does your data track 506Cs as well?
If the platform has 506C offerings and they want it to go over to Bloomberg, then yes, we do track that. But for the most part, we're tracking 506C offerings that are done parallel with Reg.CF offerings, and then there are select ones that we do. I know Seed Invest does a lot of 506C offerings, and so we track that type of data there.
Yeah, and then I have one last question for you. If I were to do a search on this, could I search by industry and find out, let's say, what's the biotech world doing? What's real estate? What is that kind of thing? Do you sector out as well?
Ron, we have 450 Neiss codes represented in the data set. 450.
I'd say that's a yes, Ron.
Yeah. It's not like, that's the other thing that, I get so frustrated, by the way. Yeah, I'm sure you hear it in my voice, with your VCs that are like, oh, this is not meant for, us, or, this is small potatoes. I would say, yeah, you know what, you have a point if it were just, a data set of, 10 different industries that were small, Main Street, little, barbershop local businesses. But the fact that you've got waste management companies, the fact that you've got recreational vehicle, electric vehicle companies that are getting their start by raising money from the crowd, these are not going to be small Main Street businesses. These will be your next, Facebooks, your, Apples. Yeah. And they're getting started, mark my words, from their crowd and from the crowd. And this will be how, by the way, and so what we've done is we've created an on-ramp for these businesses to raise money from the crowd. But the next evolution of this is these alternative trading systems, these ATSs, which are private exchanges for, trading private securities. That will be the liquidity route for the crowd in these hyper-growth type of businesses that, are your Pelotons that want to exit, where the crowd wants to exit before an IPO. So we're not building pent-up, illiquidity. we actually now have a solution where these investors can go and list their securities, provided that companies do things too to comply with state securities laws. In particular, they have to provide ongoing disclosures about their company financial well-being, very much like you have in 10Ks and 10Qs. But now that we've solved that problem, and this is another startup I'm working on for another conversation at another time. It's called Guard. That one literally helps these private companies do their quarterly and annual disclosures in a very similar format to the public companies, but it helps these ATSs make sure that those issuers are compliant with state security laws so that these securities can be traded on those exchanges.
So you're saying that there is a secondary market actually for these platforms, basically. It's going to be evolving,
It most definitely, but you have to remember, a market depends on supply and demand. So not every security, not every company is going to be able to make a market for their securities, because you know what? If a barbershop raises $25,000 from their local community, it's probably going to do a debt raise anyway. It's not going to do an equity one, but it's not like they're going to have an exit. What I'm talking about are your electric vehicle companies that are coming into the marketplace, people that are working on, new means of transportation, big lofty ideas that, where they're working out the kinks in the technology and all that stuff, but have, potential that we've, not seen. Those type of businesses, when they achieve the scale that they want and they haven't gone IPO, or maybe they won't go IPO because of the cost of compliance and the issues with IPO are deterring many companies now that they're waiting, but that doesn't mean investors need to wait anymore, and they'll be able to put their securities up on these exchanges prior to that to get liquidity.
There's so many
I'm sorry, Ron, and you base all bottom line is that all these companies, they create jobs. It's not just for investment, and that's what basically it's good for the community, it's good for the investment, for their so they create jobs basically in their local community basically. So that's a very good animal. I wanted to mention something on Bond before we go over there. So I have to make a disclosure. We are working actually, our company FinTech World, we're working on a brand called Crowdfunding USA, which is right now it's in a soft launch, and then it's going to be evolving the next year to the Reg.CF. But for now, we built that thing, giving free. It's a charity. We're giving free masks for children. It's been very successful with this. So the website is called crowdfundingusa.com. So that's what I wanted to make a disclosure on that. But and we're looking forward to it. But I wanted to ask, Woody, is that if somebody companies wants to present themselves to one of those platforms, how do they go? They just need to contact them? How does that basically work if as an entrepreneur, we know the investors, they go to those platforms, they put their money in there, basically 1,000, whatever bottom line is. But what about the entrepreneurs or, local barber shop out there? What do they got to do? How do they got to start from that?
I tell people all the time to check out the different platforms and research the offerings that are taking place on those platforms, so that you can learn about the type of offering that best matches what your business does and what incentive you want to offer to your investors. So if you're a Main Street business and you're bricks and mortar and cash flow is how you generate most of your money, a debt offering is probably going to be what you want to do. And there's platforms that really focus on that. Honeycomb, Mainvest seem to have a niche in that space, and you can learn a lot by going to their websites. If you're more of a high-tech type of thing, you've got your Start Engine, your Refunders, and your Seed Invest. But there's a broad spectrum. NextSeed, which was just acquired by Republic, they were focused on restaurants. So, I tell people, type, restaurant and then crowdfunding and see what comes up, and then you can learn from that. But the one thing that I wanted to circle back, Sydney, that you brought up, which I did not want to leave without telling people, is you guys had talked about this is an economic engine. This provides a lifeblood and a lifeline to these local communities. It's really the local economy. If you look at, because we collect all this data again, and I keep on coming back to it, I can see what the revenues are that are generated, what the expenses have been, what their net income is, and we can calculate how much money is being pumped into these local economies. It's been about $1 billion in just 4 years. So this is $1 billion that's taking place in local economies, not in your New York cities or your San Franciscos, where, yes, there are many companies that are raising money through online investment, but these are local businesses all around the world. And Amy, a good friend of mine, Amy Cortez, wrote a book about local vesting, and in it she said that, for every dollar that's invested in the local community, it recirculates 6 times before it leaves that community. So imagine $1 billion invested in the local community circulating 6 times to all the contractors and suppliers of that local business. And that's what we're talking about, not just in terms of, the jobs engine that we've been talking about, but what the economic multiplier is for these local communities, which is why the government needs to engage in this in a better fashion so that we can help these small businesses all across the United States.
No, that's huge. That's really great stuff. We talked about Sydney's website. What about you, Woody? If people want to get more information, how do they contact you on?
Our website is crowdfundcapitaladvisors.com, so they can go on there and get all the information and learn about the data set. We publish a lot of information from the data. One of the interesting reports that we published to support the Main Street Recovery Co-Investment Fund is we analyzed how crowdfunding has had an impact on congressional districts. And then we published, I think it was a 30-page report on it. And what it showed is 93% of all congressional districts have had at least one crowdfunding offering. So this represents the entire United States, really. And I think it's great potential. It was fascinating to see, oddly enough, that the Democratic districts seem to outperform the Republican districts when we, traditionally, I think of Republican base and Republican ideals as those of supporting a business. When you look at the data, it might make you question, are Republican values more towards big business and not necessarily small business, because the data is currently showing that the Democratic districts are far outperforming the Republican ones.
Interesting data there.
Yeah,
hey, Vicky, I was going to say.
Yeah, no, let me interrupt you. But Vicky asked in the beginning of your program, what we're going to have a different data actually, and Woody can say that about since this 5 million instead of 1 million going to the 5 million. So we're going to see a lot of interest. That's what crowdfunding is. Equity crowdfunding is evolving right now because of 1 million was okay, but 5 million we're going to see a lot of bigger data. And do you participate that? I mean, what are you looking at the outcome? I mean, next year we're looking at 2021 and behind. This is going to be a whole lot of different. Yeah, I mean, a lot of people are getting more interested now in equity crowdfunding.
Oh yeah, if you just look at, let me just look at my numbers here. So right now, regulation crowdfunding kicked off in May of 2016. So we look at things from a fiscal year. We can look at it from a calendar year, but it allows us to track year to year what's happening. In the first fiscal year of Reg.CF, there was $40 million invested. So far this year, we've got 5 months left. There's $163 million. We'll probably end up through April with about $283 million invested. So just look at that multiple there. It's jumped dramatically. And so I think with the cap going up, that number is just going to double. I think next year alone we'll probably have $500 million invested into these local businesses.
Oh man, that's a huge number right there.
That's a lot.
Hey, we're going way over time. Vicky, do you want to close this out? Do you have any other questions before we stop?
Well, I have one question for our guests and for our listeners to contemplate as we sign off. What kind of impact do you think the tokenization and blockchain is going to have on crowdfunding in light of a secondary market and liquidity?
Yeah, I think it'll be slow, but I think it'll be impactful. And the reason that I say that is because I've yet to see anything that fundamentally changes overnight. And when it comes to tokens and blockchain, you're going to have a lot of people that are like, what are you talking about? So we've got a lot of education, and I know you guys focus on that and do a great job of it, but we're going to have to do a lot more education of people in the marketplace so that they can understand what these tokens are, what they represent, and how to utilize them.
Exactly.
I think that it'll play a bigger part as well in the secondary market, because what's beautiful about the blockchain is it allows us to very easily track the exchange of assets. So these could be security tokens that are being traded. The biggest challenge, I think, for any business is tracking the transfer of securities over time, and particularly if it goes on to secondary markets, how much more challenging that can be, which is why transfer agents are so important. But when you've got the blockchain in there that's really playing that role, it seamlessly does it in seconds, like not even seconds, it's like nanoseconds. And so I think, that's going to have a fundamental impact down the road. I think we just need to get people to understand what we're talking about.
Right, so that they trust it, they understand it, they want to play with it. And also, I think that one of the nicest things or best things is the less hands that touch every transaction or transfer of funds makes everything easier.
Yep, that's true.
Just across the board.
Mm-hmm.
Yeah, absolutely. Well, this has been wonderful, guys. I just want to thank you guys and also Woodie participate this. As always, I like to make a disclosure, where anybody does the investment, they have to do their own due diligence. We're not requiring any, and recommending anything out there. So do your intelligence, do your due diligence, so then if you, and invest wisely if you do. So. That's
excellent. Well, Sydney, you just saved me 3 sentences. I was going to say the same thing. So there you go.
Sorry about that. But, you can say that. You can double that. But for any entrepreneur out there, I think, as Woodie mentioned, that it's a great way that they want to raise for the community, for their own businesses, and there's just another way if the banks say no or you can't get to the bank. This is a good option, basically.
Yeah,
go out there and do a market validation.
Thank you for being a guest on the show again, Sydney. Always appreciate you coming on. Woodie, thank you so much for your time and all your insights here. It was a great show today. So appreciate you coming on board and telling our audience all the data that we talked about today. It was great.
Well, thank you so much for having me again. I really appreciate it.
Yeah, and Vicky, thanks for co-hosting. Everyone, you're listening to the Mappable USA podcast at MappableUSA.com. If you go to that homepage, you scroll down, you'll see all our syndication sources. Subscribe to the one you like best, and you'll never miss another episode. If you want to be a guest on the show, like Woodie and Sydney were today, there's a guest tab. Just click that and fill out the form. We'll see what you can do about getting you on the show. And if you like what you heard today, send us an email, info@MappableUSA.com, or just comment on whatever page you're listening to this podcast on right now. So thanks for all your support. Thanks for listening. We'll be back to you next week with another Mappable USA podcast. Have a great week, everyone.